welcome. My name is Paul Wallace. I work for Bloomberg News. I head the political and economic news for Bloomberg in the Middle East and North Africa. We'll get right into it. I'll just quickly introduce our panelists today. To my left is Huda Lawati, who's the founder and CEO of Aliph Capital, which is based in Abu Dhabi. To her left is Philipp Schmitz, who's an executive vice president at Ardian, and I believe mostly based in Germany, but traveling a lot around the world. And to his left is Mihir Unadkat, who's the managing director of Lone Star Funds and also based in Abu Dhabi. Now, this is a fascinating topic that we're discussing today. Huda, I'd like to start with you. Can you just tell us what makes you excited about, let's say, the GCC at the moment when it comes to private equity, when it comes to private capital investments? What are the things you think of that make you think this is a really attractive opportunity in the next few years or longer?
Thank you. I mean, it helps that the head of asset management, Goldman, says it's a very good place to invest. But look, I think it's been, I'm from the region, I'm from Oman, I've been in private equity in the region for 22 years. When I started off, it was a very niche, unknown asset class. But I think over the years, it's gone through its ups and downs, and today the region in itself, whether it's for private capital or otherwise, look around you, it's become a very attractive region because of the shift we took. I think about 7, maybe 8, 10 years ago, we had a huge shift from governments spending in the region and investing outside to also investing inside. And I think that's created an incredible amount of opportunity. It's brought the role of private sector to the forefront, and it's brought in the recognition that the private sector in the long term needs to play a big role across sectors, across countries, for long-term sustainability, which is a focus for all the leadership. And if you look around, you have a region that has a young, growing population. You have an incredible amount of resources, infrastructure spending in this region, and the quality of infrastructure is better than anything else you see out in the world. And at the same time, we have a currency that's pegged to the US dollar. So I think the opportunities across sectors, across the region, and there's a lot to come, and we really are only starting to reap the benefits of the infrastructure investment, the reform changes that have happened in the last 8 to 10 years.
And Mihir, turning to you, you moved to Abu Dhabi, I believe it was sort of about 9 months ago when Lone Star opened its office there. What was the reason for that? What was the reason the company decided to do that?
Yeah, so at Lone Star Funds, we're a global private equity fund investing in corporate buyouts as well as commercial real estate. We've raised $95 billion, managed $55 billion. A lot of our assets are actually finding real growth opportunities in the Middle East. So another thing that we focus on is, from a sponsor perspective, leaning in on our assets to find partnerships, joint ventures, real growth opportunities in the region. For example, we own Manuchar, which is a chemical distribution business. We formed a JV with the Canoe Group for expansion in Saudi. So we're trying to find each asset where there is relevance in the economy. In the GCC, you've got 7, 8 economies. So you've got to find ways where there is strategic importance to the country and where your assets can grow. And that's why we wanted to be, we've been present in the region for a few years now, but presence has grown into substance. Substance has grown into what are your assets doing. Assets are then, forming joint ventures and partnerships and growing from there.
And Jan, same kind of question to you. When you look at this region, how do you view it vis-a-vis the rest of the world when it comes to private capital and private equity?
Yeah, it's an interesting question, and indeed, I travel, as you said before, a lot, and I think there's very few regions globally where I see that much growth and dynamism. And I mean, we've been in the region since 2005, saying that we've had the first partnerships with large clients. We now have a large office in Abu Dhabi. We're intending to open 1 or 2 more in the coming quarters and years. And I mean, there's a lot of growth, and we've invested in on different levels, let's say. One is, on a fund level side, so we've invested into local funds that invested in the region itself. We've bought a lot of secondary portfolios, and it was interesting. It was the first thing that the previous speaker, Mark Nachman, was talking about, what could be an interesting allocation. Currently, it's secondaries, and here we've done a lot of partnerships with local institutions in different countries here. But also, if you go one level further down, we've done partnerships, either thematic funds on the semiconductor space, we can talk about that later, but also in the hydrogen space, on the infrastructure side. So just to say, there is huge growth. That's why we think it's really interesting. 15% of our capital, and we're a 200 billion AUM firm, is now coming from here. But we want to make sure it's reciprocity. So we also invest back in the region, have offices on the ground, and a lot of other things were said. The young population, a lot of GDP growth, low debt levels in the economy. So a lot of points that really are interesting.
I just want to turn to what's a possible downer, not necessarily for this region on its own, but for the global economy, and chiefly because of things like trade wars. We've seen the IMF downgrade economies, across the world, including the biggest, the European ones, the US, Japan, etc., pretty heavily about a month ago. Huda, turning back to you, what do you think that could mean for the GCC's economy? Do you worry that this could be a really tough year? Maybe the next 2 years could be tough, or are you still pretty optimistic about the macro outlook?
So I think from a GCC perspective, there is a lot of insulation from a lot of these impacts. We're not a huge exporter today, and we continue to be optimistic. But I think just to step away a little bit, one benefit of private capital, alternative investment, is that you don't have to think about things in a 1 year, 2 year scenario. You are thinking about long-term sustainable trends, the trends we talked about. You're looking for opportunity. Some of this uncertainty, some of this nervousness creates buying opportunities for us as well. So I think from our perspective, it is obviously something to watch and be agile around how you invest, but certainly it's not something that changes our fundamental strategy or outlook. The other thing I would say is that from our perspective, now moving on not from the investing side, but from the fundraising side, and it was alluded to in the last panel as well, it also cements the approach of diversification. I think it's important for globally for investors to diversify. A lot of people say, well, I'm investing in the in US or in this Asian market, why should I invest in other markets? I think the reality is that it is important to diversify into different markets so that you can hedge your bets across different regions and different risks.
I mean, Jan, do you think that relative to other countries and regions, the GCSE could be perhaps a beneficiary of any downturn, that this will, if you look at the tariffs, for example, okay, let's see how they finally end up, but the GCC ended up pretty well off. It got the 10% baseline tariff. As I said, things could change, but the downgrades, the macro downgrades weren't that big for the region. I mean, do you think that, vis-a-vis other regions, it could, it's a bright spot, if you like?
I was actually going to say that, absolutely. I think, diversification is king, especially in a market like today. And, I mean, it's also clear that the US, from where the tariff implications have come out, has quite a lot of good friends in the region. Since last week, that's even more clear. But just, to say, I think really, for every market outside the US, there's going to be more diversification. It's still going to be the big capital market, the big economy that attracts a lot of capital, I think. But for all the other regions, I think there's really upside. And and if you invest with the right GPs, with the right management teams, some of them we have here, but then you can really make money. It's not going to be 50% of an allocation, but it can be 5 or 10% into the region. That's a lot of capital already. So I think really there's upside.
Mihir, I just wanted to turn to you, and as Jan sort of alluded to, the trip last week by Donald Trump, I think it would be amiss of me not to ask about it. Obviously, a lot about that trip was about the US trying to get Gulf investment into the American economy, but it was also about investments the other way around, about showcasing the Saudi Arabian, the UAE, and the Qatari economies for US and presumably other world investors too. I mean, what did that trip mean for you? And is that what was on show? All the deals when it came to AI, when it came to energy, aviation, and things. I mean, do you think that really shows where the region is going in the economic opportunities here?
Yeah, look, totally. I think, it's no secret there's a lot of capital in this region that's been put to use and put to work in a very sophisticated way internationally. But as Jan was saying, it's a partnership, right? So we're trying to work very closely with the sovereigns, with the families here, to unlock some of these opportunities where we could invest together, right? So a lot of the US high growth tech companies have also realized that, clearly there's a big market here, as Huda was saying. And they're very keen to partner, across the region to bring the technologies, bring the know-how, bring the people, bring the talent, and then grow those businesses here. So it's definitely a two-way street from here on. And it's quite exciting because at some point, as the markets evolve, we will start to see a lot of sponsor-to-sponsor deals here as well. So you'll see a lot of more, deal activity pick up.
I just also wanted to turn to AI, obviously a huge topic globally, but particularly Saudi Arabia and the UAE, and to quite a lot of extent Qatar as well. AI is something that the governments are thinking about massively. Pretty much any facet you think about, whether it's their energy sectors, whether it's education, they want to be at the forefront of the transition to the, let's call it the AI age. What, at the moment, do you see any opportunities, and I'll go to you, Huda, first, do you see any opportunities at the moment in your world, sort of for investments? Is it too early, or is it too early? And if so, are you trying to think about AI and what opportunities will exist in the years to come?
So no, definitely I think there are a lot of opportunities, and I think AI is a big word and people think about lots of complex, and the reality is AI is actually used by all of us all the time when you do a simple Google search, right? So I think the usage of AI is always there. For us as Aliph Capital, we invest in mid-sized businesses, which are mid-sized in the GCC, but probably small cap in a global sense, and we push them to embed more technology and talent and invest in that for long-term growth. And in doing that, certainly AI is one of the big topics that gets discussed, and applications are across the board. They're in the back end, in customer servicing, and improving their own data usage and leveraging that data. One theme that's obviously been there, the government's investing in AI, creating funds for it, creating regulation that allows usage of that, investing, being ahead of the curve when it comes to the ethics of AI, data set investments. All of these are being propelled. I think the opportunity of AI is not something that is going to come slowly. You've already seeing it. I'll give you a very simple example. In one of our companies, they have a global manufacturing base, from Italy, UK, and China, and a lot of what they do is technical specs. And when one hurdle to getting things to market is building out their specs, but because they're getting all these manuals from China, etc., that need to be translated and put in proper formats, etc., there's an AI tool. You implement that, it takes all of that time away. It becomes minutes instead of several months to roll out these things. So it's across the board, and I think it's happening today. It's been happening, and this region we have the agility in this region to do things quickly in government, in private sector, in small markets, and the regulation and the environment is enabling that.
So even in that company, would that be Sanipex?
Sanipex, correct.
So
yes.
okay, so even in that kind of company, AI is benefiting it in terms of time saving. Okay. Yeah. Jan, when you travel around the world, I mean, what do you staying on AI? What do you think of when it comes to the GCC and AI? Obviously, the ambitions here are huge, and again, we saw that on show when Donald Trump came here, whether it's deals for data centers or the Gulf countries trying to get better access to the most powerful US chips and so on and so forth. Yeah. I mean, does Ardian look at the GCC and see it as a real bright spot for AI in the future?
I mean, totally. And to add what you had said, I think AI needs a lot of energy. I mean, the data centers, and so that's just one thing that obviously the region here is relatively rich, energy rich from different sources, oil, gas, and so on, sun. So that's a logic, match or a perfect match. I would add that we at Ardian, we're starting a partnership, a strategic partnership with the QIA in the semiconductor space. And really, in Europe we do have many end markets, but also we do have great science, great education, great centers of knowledge, that have done a lot of research there, research centers. And that combining it, bringing production here to the region, having a center of excellence through Invest Qatar, but the investment through QIA, I think that's really, it shows, we're really investing in the region too, and there's really a partnership. So yeah, I mean, there will be opportunities for sure.
And I believe, from what you were saying earlier, you may be signing something with the QIA tomorrow to do with that, right?
That is true. That is happening indeed tomorrow, and we're very happy and very, very proud. And we have the Cillian team here also that we've partnered with on this, so that's great. We want to make sure to invest here also and have knowledge sharing both ways. Yeah.
Yeah. And Mihir, same question to you. What do you think of the region, and what opportunities exist when it comes to artificial intelligence?
Yeah, so at Lone Star, what we've done is 8-10 years ago, we formed a team for ESG that looked at ESG for every single asset we own globally. A few years ago, we formed a team for AI, and that's starting to ramp up a lot. So what that team does is, across assets we own, goes in from a sponsor perspective and starts to advise on new technologies that we can implement. And in fact, we've seen a lot of pickup in AI in manufacturing, industrials, processes, and a lot of the, I wouldn't say old school economy, but a lot of the factories that we, own and operate, right? So we've seen a lot of pickup on that. It does, clearly improve our efficiency levels, but we are focusing it, at the fund level, and then that team, goes through every single asset and prepares a report and a roadmap on how to integrate, into the AI world.
And Huda, just turning to you, I'd like to get a sense of what you do with your companies, what the main things you focus on when it comes to growing them and eventually getting them to the point where you can exit. You've spoken about how by global standards, the companies that you buy into may be small, and I think you've got two at the moment: the biggest pet shop store in the UAE, and Sanipex, which I mentioned, which makes things like kitchenware and sanitary ware. What are the type of things that you focus on to build them to a size where you can exit?
So, I think if you listen to the gentlemen here, they both said about having raised capital here, investing here, seeing the opportunity, wanting to also give back. I think one of the things that a lot of international funds or investors in general will tell you is that, well, where can we find the opportunities? And then, you talk about scale and depth of exit markets, and importantly, readiness of the businesses for them to invest in. So I think we play a key role in finding the opportunities and helping them get to that stage where they can attract foreign capital and bring in FDI into this region as well. For us, what we see in the mid-sized business that we invest in is that they don't invest in technology and talent in a way that would allow them to become the leaders of tomorrow. They're kind of stuck in the middle. With the VC space, there's a lot of investment in technology because they tend to be tech-native businesses. They often are given the runway of not delivering profits to do that. And then you have on the large cap side where there's enough resources to invest in technology, talent, make mistakes, changes. In the mid-sized business, you're sort of in the middle where people are still expecting that constant growing profits, but the resources not enough to invest in talent and technology. So we very early on in our investment thesis identify the value creation areas. Digital transformation is a key aspect. Building up the talent base is another key aspect. We have to build a lot of conviction because we then invest in the J-curve to allow them to get there. What we find is the readiness of the businesses on the one hand and the skill set necessary to make those investments are probably our two biggest challenges. And therefore, I think investing in leaders, like the pet shop is the largest pet businesses across, e-commerce, retail, pet boarding, daycare, and we're going into veterinary clinic, is important because then you have the, to use Bain terminology, the right to win. So we try to find those niche categories where the leaders are there, they're growing, they're still of a size where we can invest and build them into larger businesses, then they can come and buy.
And when do you have a typical time frame? What would it be? Would it be 5 years? Do you think it would take longer?
It's a very good question. I think having been in this region investing in private equity for 22 years, when the term private equity didn't exist in Arabic and we sort of had to come up with it, I'll tell you the two big lessons is you have to give these businesses the time to build up. So we often talk about an investment period that not everyone reacts well to. We say our hold periods are 5 to 7 years. Doesn't mean we have to hold everything for 7 years, but that planning for the 5 to 7 years gives you the runway, gives you the ability to make the right decisions for investment into the business and for long-term sustainability. The second thing is the debt. I think what we did early on in the private equity space here was sort of get the LBO toolkit and the growth toolkit and a lot of different things from the West and kind of mix them up and deploy them here. It doesn't work. I think acquisition finance is good for LBOs. It's not very good when you're looking to grow businesses because you want to keep the capital available for growth.
So I think a lot of debt is not necessarily a good
exactly.
thing for you. Okay.
And I think fundamentally there's still a lot of it's reducing, but the dependency on oil in this region means that the cycles tend to be more accentuated. So both having a longer investment horizon and low reliance on debt and more on growth itself allows you to ride out those cycles and be able to deliver the returns.
And are you sort of thinking that it's not just other private equity firms that will be your source of an exit, that public markets too will be a real the IPOs and things will be an option?
I think public markets as well as strategics. I think if you look, and I before starting Aliph Capital, I was chief investment officer at Savola, which is the largest consumer conglomerate, and we were very active in M&A. I think if you see, capital globally has become impatient. Most people want to grow quickly, and that means inorganic avenues are in every in every boardroom, in every corporate strategy discussion. And we've seen it in the telecom sector, and SEC, Qatar Telecom. We've seen it in the food sector, Savola, Ardian. Everybody's acquisitive. So that's a very real, and actually they have acquired things from private equity investors. That's a very, very real avenue. The the IPO market is also deepening and growing. I think it's important to take more, businesses that are ready to the market. I think if you are in a rush to do that, you take businesses that are too small or not ready, you will have a bad result, because even with our investments from a compliance and readiness perspective, we do see a lot of work to be done. So I think it is important to look at that as an avenue. We think it's growing very fast. You've seen the IPO market here, but it has to be the right scale.
And Mihir, just turning to you, what do you sort of think is unique about the region in terms of what you need to focus on with companies that you own?
Yeah, it's a good question. I think the Middle East is a region where it's evolving. It's evolving in a very fast way. The sovereigns, the governments, the families own a lot of the assets, right? So spending genuine amount of time to have real alignment, to have a real relationship where it fits is where bulk of the teams on the ground are spending time at sponsors, because to do a deal, you have to have the right scale, the right entry coins, the right partners, and then you can value create and then exit from there. But a lot of times in the Middle East, what I find is that the most amount of time is spent building that pre-relationship. Then you have access into families that own a lot of the good businesses here. In fact, the Middle East is one of the regions where we found high growth but very stable and growing margins as well, right? So you have that combination of it's a growing market but at great margins. But it's about getting to know how to unlock that deal. That's where I think most sponsors are spending time and the focus. Because once you get that transaction going, then they trust you and they grow with you. And then you can always find exits to other sponsors, or even the capital markets have grown really well in the last few years across the region. It was always a dividend yield market, which is now gradually moved into a growth market as well, right? So you do have exit options.
And you're saying that sort of high growth, continued high margin outlook sometimes makes it difficult to sort of buy off family groups and things like that.
Yeah, I think it's to make that relationship and to find that alignment. I think if you get those two things in the right way, and it takes time, it's gradual, but once you get that, then you start to unlock a lot of deals for yourselves.
And Jan, I'd just like to sort of finish off in the last few minutes by focusing on what you all think the GCC or how the market needs to improve to get bigger, to grow, so that you are allocating whatever it is, 5% or more of your capital to this region. What do you think needs to change?
Yeah, I think a lot of good steps have taken place already. The data that we said before, the GDP growth, all of that is great. I mean, I think the whole region by itself could still maybe grow together more, when it comes to capital markets, when it comes to, doing business from one country to the other, that becomes easier. I think that would definitely be helpful. I think, if you look at the size of the market, it's still, it's not as big as the Americas or as Europe or some parts of Asia, but with the growth rates, as I said before, to have a certain percentage points of your location going onto the market, it could be interesting. But more can be done. We talked about it also shortly before. But yeah, I think that there's a lot of efforts. The traveling is relatively easy, but having more capital market union, having if you're in one country headquartered, that you can easily do business in the other markets, that I think has to improve.
Okay. And so when you talk about sort of integration, if you like, is that so that you can almost see the GCC as one block rather than individual companies?
That would make it easier, yeah, as a region, absolutely.
Yeah. And Huda, same question to you. What do you think needs to change? What would you like to see improve, shall we say, when it comes to the private equity, private capital market?
Yeah, no, I mean, look, I do second that. I think that the more we are harmonious on regulation, licensing, and continuous, the more passporting there is of investors and capital raising, the easier it would be to do. Because even within a certain business, when you invest in it and when you expand to an adjacent country, reducing that regulatory burden, that new market entry burden would be super helpful, not just from increasing investment, but also expanding those businesses and easier to create scalable businesses, given you would be addressing a bigger market. I think the other thing is just awareness and education around business building. A lot of what we come across is, very, very good businesses that have not invested in their back end, that have not invested in their infrastructure, that have not, that are, sometimes you walk away from businesses because they're just not able to see what it takes to become a proper institutionalized business, and it has a cost to it. So you could be, delivering a 50% margin, but because one guy manages it, but guess what? You're going to bring in a CFO, and you're going to bring in a HR person, you're going to bring in tech person. That margin is going to contract, and people will be willing to invest on the basis of that contracted more run rate or long-term margin, but that's good for the business. But building that understanding also takes time, and I think there's a lot of education that's happening now, and it needs to continue happening.
All right, we're out of time, but I'd like to thank my three guests, Huda, Jan, Mihir. Thank you very much for the discussion.